How's it going, everyone, and welcome into my reversal video. This is going to be part 4 in my 5-part series on the phases of price and the last individual concept before we blend all of these together. Now, if you haven't seen the prior videos, specifically the expansion video, please make sure to check that out first before getting into this video. Let's get into the PDF. So what is a reversal? A reversal is when we have expansion met with expansion, and that is what forms a reversal. This is the opposite of a continuation signature, or what you saw in the previous videos, where we had expansion and a retracement to continue lower with a new expansion, or expansion, consolidation, manipulating the high to continue lower. A reversal, we will have expansion met with expansion, and so we are following that trend, right? It is expanding higher. We're not wanting to fight that expansion, so we're looking for continuations higher following a reversal. So when or where do we expect a reversal to form? We want to see a reversal form at a point of interest. So this will be an old high or old low, or a swing high or swing low. So when we have price expanding into a swing high, I want to look at price and see, do we get a consolidation? Do we get a retracement to continue higher? Or do we have expansion met with expansion, forming that higher time frame wick or that reversal? And you can see it will look a few different ways. Here we have expansion, a little consolidation, which is manipulated, and then expansion away. Yet this is still forming a higher time frame wick. It looks a bit cleaner with these V-shaped reversals, where we have expansion into a low, and then we have a nice clean expansion met with expansion, forming that nice V shape, and then expanding away. Now, how do we actually interact with these reversals? Well, if I'm looking to trade a reversal, what I'm going to want to do is view this on the lower time frame. So when price trades or expands into a old high or a swing high, I'm going to want to watch price on the lower time frames to look for reversals. So you can see here, price expands. We have that change in the state of delivery, forming that higher time frame reversal. Now, what happens if I miss this reversal, or if I don't want to trade this reversal? How do I interact with it? I don't have to catch the high to trade a reversal. I can still look for the continuation following by finding a protected swing, which if you haven't seen my video, please go ahead and check that out, and this will make a lot more sense. Now, what PD array is associated with reversals, and that is an old high or old low, or swing high or low. Now, one important thing with this is you don't want to choose a random high and low for price to reverse off of. You want to find those relevant swings in the market, and an easy way to do that is to focus on previous days' highs and lows, or previous week's highs and lows. Those are always going to be relevant to forming reversals. So with that covered, let's go ahead and check out TradingView to go over some examples. So here we are in our first example, and what I'll want you to look for throughout these examples is just look for what happens after we expand. Do we retrace? Do we consolidate? Do we have another expansion in the opposing direction forming a reversal? Now, obviously this is the reversal video, so I want you to focus on when we get expansion met with expansion. So you can see here, we do take out a consolidation range high, and we have expansion met with expansion. Now, what are we missing here? Because this structure looks good, right? But if I was just pattern trading this, why would I lose? Well, does it make sense for price to reverse off of a random high right here? Not really, to leave all these failure swing highs, right? So we can let it have another candle. If it is going to leave these highs, we would get what? Expansion, retracement to continue, right? Or expansion, consolidation, manipulation, continue, right? So if I don't know what's going on, I can just let another candle close. And we let another couple candles close here. And what is this? Expansion. Is this a retracement? No, it is displacing back into the range. Is it consolidation? No, it's displacing back into the range. Now this is expansion met with expansion. So now this is bullish. So if you look, expansion met with expansion, it is bearish. This expansion met with this expansion, now it's bullish, right? So the candle closures give you new data. And what do? We go expand through these highs on the left. Now this is a relevant high that we could reverse off of. We expand into it. I want to see, do we consolidate? Do we retrace, form a low to continue higher? Or do we have expansion met with expansion to reverse and go lower? So what do I notice here? We have expansion met with expansion, and we have that change in the state of delivery. Now, ideally here, this would respect the mean threshold of this, right? One thing to notice is there is a bit of a large wick there, but let's see what happens. We let this continue. Oh, we have expansion here. This is not what you want to see if we want to trade this lower, expansion back up. So I want to see, I'll use the phases of price here. Do I have a retracement to continue higher? Do I have a consolidation, in which case I can watch the highs or the lows? I can watch my consolidation video, or do we have expansion met with expansion? Well, let's see. Does that candle tell me much? Nope, it just makes a fair value gap. It could still be a retracement, it could be consolidation, it could be a reversal. I need to let another candle print. And there we go, we have expansion met with expansion. So looking, do we have a continuation with the closure through? We do. So now we have this high is protected and this high is protected. Now here, if we have expansion met with expansion as a reversal, I'd want to see either price just expand lower or have a little retracement to continue lower or a consolidation to sweep the high to continue lower. That's how I'm starting to blend the phases together. What do I have? We sweep out the low. We have 10 a.m. We get a spike, but you look at the body, expansion, retracement, expansion. Now we're taking out some lows to the left. I want to see, do we get expansion met with expansion to reverse, or do we get expansion, a consolidation or a retracement to continue lower? I want to see if we get a continuation signature or a reversal signature. We let 2 candles print here. That is looking like a consolidation or a retracement, right? So this is looking like a continuation lower. We let this go, expansion. Oh, this could be a nice reaction. Is it reversing off of anything, right? Oh, yep, it's in a higher time frame fair value gap. So it could reverse here. Let's see. Oh, reacting off this fair value gap. Expansion looking like a retracement to do what? Continue lower. And now we have expansion lower. So hopefully that makes sense how you start to blend these phases of price together, but specifically in this video, we're focused on when price expands and then is met with that expansion, forming a reversal. Let's get into another example. Now let's get into our next example, and before we begin, there's a few things I want to talk about. You see this reversal candle right here with the large wick. This is what I was talking about when we have expansion met with expansion, forming a higher time frame wick. We look into the lower time frames here. What do we have? We have expansion up, met with expansion down, forming a reversal, and then I can look to trade the continuation following. That is what my model looks for. Now, specifically in this example, I wanted to show you what an ideal reversal structure looks like for me. Right? We have expansion met with expansion with sweeping out lows. And I'll talk about why this works. So you can see we are taking out a low here. Now, as we let this play forward, what do you notice? We have expansion into a low. Do we get a retracement to continue lower? No. We have displacement back in. Do we get a consolidation? No. We have expansion met with an expansion, also closing over the series of down close candles. So you can see how we blend those V-shaped reversals with the change in the state of delivery. This is what an ideal reversal structure looks like for me. And the reason for that is you have all these people that are early longs into here that then get swept out. You have breakout traders who are trying to trade short in here, and then it traps them, right? So basically this structure here is throwing everyone out of the market, and that is what I like to see. So when we have expansion met with an expansion, now we want to see, do we have consolidation to sweep a low and can trade higher? Do we have a retracement to trade it higher? Or do we have this met with expansion, which then fails to trade lower, right? That's all I am looking for. So next day prints, we have the T-spot. This is a nice shallow move, right? This is expansion, this is retracement. So then when we form a protected swing, as we close through the series of down close candles here, we can then trade this higher. And what do we have? We have expansion. Now, once again, we can repeat this process. I have expansion higher. Do I get expansion back lower to form a reversal up here? You can trade that to the lows, or do I have a retracement to trade it higher? And I'm using the same example we used in the retracement video to show you what I mean here. Right, we get a nice shallow move and then an expansion higher. Now, the main points I wanted to draw from this specific example was using the higher timeframes and how they blend into reversals. Expansion met with an expansion will form a higher timeframe wick. expansion met with expansion is going to form that higher time frame wick. You can start to use higher time frames and lower time frames to visualize each different time frame and how they look together. Let's get into another example. So let's take a look at this next example here. You can see we've had a candle to closure. We have a change in the state of delivery. And what do you notice about this change in the state of delivery? A nice aggressive move lower and then back up into the range, right? So a V-shaped reversal. We get a continuation higher in candle 3, but have we hit a relevant high? Does it make sense for price to reverse off this high right here and leave this previous day's highs? No. So if I'm looking or anticipating price to trade higher, I'd want to see it take out previous day high as well as this swing high to the left. Now, this is going to answer a question of when can I look to trade opposing the trend? And that would be when you can anticipate a retracement or a reversal. So for instance, if we trade up into this high, we hit the target, that's where I could anticipate price to retrace back into the range or to reverse. So let's see what happens. You can see, doesn't make sense to try to trade a reversal in here because it hasn't hit a relevant high. There we go, we take out the high. You can see we expand through the high. You can say that we expand when we create fair value gaps. Now we take out that target, that high, we take out these equal highs, and we do what? We form a change in the state of delivery. Now this is where I could anticipate price to trade back into the range, right? Back through its daily open, and I can find internal liquidity. Right, so an easy target would be this fair value gap right here. Or if I think price is going to reverse, it could trade quite a bit lower. Let's see what happens. And there we go, we get that expansion lower. So the main thing here is if I'm looking to trade opposing the trend, I want to trade a reversal following some sort of relevant high being taken out or relevant low being taken out. Here you can see we take out that relevant high. And then the structure aligns with that, where we have expansion met with expansion forming a reversal. Here we have a consolidation. We start to expand away from that. We take out the daily open. We come back out. We take out these equal highs. And then we get that move back into the range. Let's get into another example. So in these last few examples, I'll show you a bit of price action, and you can take a minute to pause and analyze. Just look at the phases of price and maybe the daily closures. So you can pause or take a minute. But if you notice, we have swept out this previous day's lows. Remember how I was saying that previous day low is an important and relevant level? And what do we notice? Expansion down, right? And you can see that with a fair value gap that is being created, and expansion back up. So that is what? Expansion down met with expansion, that is a reversal. So that paired with, if we close back inside this previous range, I'm anticipating what? For price to continue to trade higher. So if we've had expansion, we want to see a continuation signature. That's either going to be a retracement or a consolidation. We don't want to see price, what? Meet it with more expansion lower, because then this low is likely to fail. So let's see what happens. There the model prints. We have the change in the state of delivery with that V-shaped reversal. Now I'd want to find a point of interest in this area. So taking a look, we have a swing low. Does it make sense for price to reach into this low, leave this one right here, and then go higher? No, it doesn't. So I'd be focused on this low. That would be the relevant low. So let's see if it gets taken out. Here you can see price gets taken out. So if we've had expansion, this is looking like a retracement. When is price going to expand again? When we get a new change in the state of delivery. Here you can see we've swept out the low. You can use either of these, but I would use this as the series of down close candles. Now the reason for that is the swing high that created this swing low. I'm more interested on this candle versus this candle. From here, I'm anticipating this wick to have formed, and I can anticipate it to trade higher because we've gone expansion, retracement, anticipating the end of the retracement phase into new expansion. And there we get expansion higher. So hopefully you see using expansion met with expansion is a reversal. Let's get into a few more examples. Let's go over another example of blending the reversal structure with a change in the state of delivery and a candle closure. So you notice here, if we're not looking at the higher time frame, this looks pretty good. We have a range, we sweep out the low in the range, and what? We have the high in the range. We have a change in the state of delivery you could consider. I prefer the higher one. I'll explain why, but we don't have a swing point here, right? So this is the swing high that made the swing low. So I'd prefer the higher one, but we have a nice aggressive move lower with the fair value gap and aggressive move higher. What are we lacking? A daily swing point. But let's see how this works out. And you can see we do get some expansion up. It's met with expansion lower. So what does that tell me? We're not respecting the EQ of this wick. This is likely to fail. Expansion met with retracement. It expands into this low. Now, if you notice, we have expansion lower. Do we get expansion back into the range? Yes, we do. Now, what is this day paired with, right? We let this close. We have a daily candle closure that is valid within my model. Now we are pairing this with a change in the state of delivery and the phases of price. You see how those all work together versus in this example, it's not aligned with the daily chart as well. Now in this day, we can anticipate, since we don't want price to trade below here, I don't want to see price reach into this fair value gap. I could anticipate that this should support price higher. Let's see what happens. There we go. We go and trade through the range highs. Now, what do we notice about this range high? We have expansion into a target, or this daily swing high. Is it met with a retracement or a consolidation? No. Expansion out, expansion back in. So this is going to be a higher time frame wick if it closes like this. And what? A reversal back lower. You can see it doesn't close super weak. You could still consider it a reversal. It's just not paired with the daily closure. Would have to respect 50% of this wick to trade lower. Let's see. It does do that, right? So you can see expansion. Is this aggressive back in? Yes, we have a fair value gap here, but look at it. It takes 3 candles to get all of this range here. And it takes what? 8 candles to just go back up 2/3 of that. So expansion, retracement, sweeps out the high, change in the state of delivery, forms a swing, trades lower. Expansion, is that expansion? No, we also don't have a relevant level to reverse off of. Expansion, retracement, expansion lower. So you see how you can blend the phases of price. In this case, I'm just showing the reversal with daily closures and the change in the state of delivery. Now, I hope you enjoyed this video. If you did, please consider liking and subscribing. In my next video on the phases of price, we'll talk about blending them all together, as well as using daily closures, change in the state of delivery, and probably touch on the equilibrium a little. With that being said, I hope you enjoyed. I'll see you guys next time. Have a good one.